Hi everyone, welcome to my channel. I'm Doris. I'm here to share with you about my stock account and today's market updates. The Fed has suddenly changed its face and the US stocks rebounded. Will be more likely. Last week's rally was bumpy with Powell's latest comments, leading the market to reassess its future policy path. But the mixed treasury auction extended long-term treasury repair. As the earnings season draws to a close, the focus will once again shift to finding policy clues from economic data and official comments, as well as uncertainties over a possible government shutdown and the impact on the market could continue. Powell's remarks at a panel discussion organized by IMF raised a potential expectation of a further rate rise. He said the interest rate may not be enough to keep inflation down to the 2% median target range, and needed to be wary of the illusion of falling inflation. The Fed apparently is more likely to maintain the interest rates higher for longer, as it doesn't want to repeat the mistakes it made in the late 2021 and the beginning of 2022. While it is worth mentioning that the survey conducted by the University of Michigan also showed this risk. The 5-year the consumer confidence expectation index rose to a 7-month high of 4.4%, while the 5-year inflation rebounded from 3.2% from the 3.0% previously, the highest level since March 2011. Since March 2022, the Fed has raised interest rates by 525 basis points, and inflation has fallen from a high of above 9% to around 4%. The Fed is closely monitoring consumer attitudes towards price trends and the sticky risk of a long-term inflation that will affect the future policy decisions. In fact, his statement was not clearly divorced from its expression of the interest rate decision. He reiterated the successive policy decision and will continue to be cautious against the risk being misled by optimistic data and be excessive tightening. At the same time, the Treasury market quickly responded to the subtle changes in the policy outlook, with investors being very sensitive towards what Powell and other FOMC members has been spreading. The yield on the 2-year Treasury note rebounded to 5.06%, and long-term yields as the 10-year note rebounded to 4.63%, and 30-year fell to 4.73%. The federal funds futures show that the chances for a Fed rate hike at the next 2 meetings rose nearly to 25%. The flow of funds and the market risk appetite has recovered. The U.S. equity funds saw an inflow of $1.9 billion last week, the first return in 8 months, as investors become less concerned about the impact of long and staggering inflation and the risk of the Treasury yield market having its effect on the U.S. stock market. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.